Welcome to Insurance and Money Podcast. We're here to educate on the topics of insurance and money. I'm your host, Karla Howard. I want to thank you for tuning into the show today. On this show, you can expect to learn about the different types of insurance and how they relate and apply to you. Also, we will discuss your money as well, such as checking and savings accounts, credit cards, and mortgages. On our last episode, we talked about the need for emergency funds and cash value. Emergency funds versus cash value. What's the difference? I hope you have a greater understanding on why you need an emergency fund and what cash value can do for you. Today, our topic is how one life insurance policy can save a family from financial ruin. What would happen if the main provider in your family suddenly couldn't work, or worse, passed away? For most families, the answer is frightening. Bills would pile up, savings disappear, and debt rises overnight. But with the right life insurance policy in place, that story can have a completely different ending. Most families live paycheck to paycheck and are one emergency away from a financial crisis. In previous episodes, we've discussed this in detail. However, I want to go over it again. I believe it's very important. Let's take a look at the following examples. Let's take a family with a mortgage. Now, most people who have a mortgage usually go for a 30-year mortgage. So therefore, the mortgage is not paid off for 30 years. And hopefully you don't have an adjustable mortgage where the mortgage interest rate goes up, which means your monthly payment goes up. So if there is a crisis and you couldn't pay that mortgage, are we going to have to now deal with a foreclosure or collections? Can you imagine how frightening that would be, getting those notices in the mail, having people come by your home to take pictures to see that you're still living in that home? What about a car payment? 20 or 30 years ago, most of the time your car payment would be $250, $300. But today, if you want to have a nice SUV, your monthly payment could be $600 a month, $700 a month, or even $800 a month. And most parents today want to send their children to a private school, because in some areas, maybe the public schooling is not its best. So now that's going to be a culture shock for your child if they have to abruptly leave private school and go to a public school. So let's look at what happens when the income stops. Over 40% of Americans say they couldn't cover a $1,000 emergency. So they wind up having to go into debt to make up the difference. And that makes matters worse. Because how do you pay off the debt? But here's where proper planning and one simple policy changes everything. Life insurance should be looked at as income protection, not just a death benefit. Now, there is a portion of it that's going to need to take care of final expenses. It's not just so that you can have a beautiful funeral with all the bells and whistles, an expensive casket, the most expensive flowers, and the headstone monument that says a lot about how they live. And that can help it. That can happen. The death benefit portion cannot be overlooked. It is important. And one of the main reasons why you have insurance, life insurance. However, I'm going to say you need to look at the financial aspect. Income protection is one of the main portions as well. And so let's review term and index universal life insurance. How term insurance can replace term or universal life insurance can replace income loss, pay off debt, and provide financial stability. Term life insurance is a type of policy that lasts for a specific period of time. There is a 1-year renewable term, but the most common term policies purchased today are 20-year term or 30-year term. So that if you have a huge policy because you have pressing needs and you want to get it as inexpensive as possible, perhaps when the children are young, you want to maybe get a $500 or $1 million. I've seen people purchase $2 million policies, making sure that they're adequately protected and that they're not leaving financial problems if something were to happen. Most people would go with a term policy. However, you have to consider term policy ends, so that's where universal life comes in. Index universal life is a permanent policy that ties a portion of your premiums to a stock market index like the S&P 500 and provides the opportunity for tax advantage growth through a typical participation rate up to 7 to 9% annually. And guess what the best part is? The best part is if the market takes a downturn, you wouldn't lose money as the guaranteed floor is often 0%. It may sound too good to be true, but many savvy investors have been using this investment vehicle for decades. Now let's talk about the Johnson family. When Mark passed away unexpectedly, his $500,000 life insurance policy paid off their home, covered college tuition, paid off other outstanding bills, and gave his wife time to grieve without worrying about bills or worrying about where am I going to get a job to take care of all of this. See, now that's what financial protection looks like. Some people think life insurance is only for the wealthy or only for parents, and that's simply just not true. Anyone with people depending on their income needs protection. And we talked about having a mortgage, a family with a mortgage, car payment. All of that has to be taken into consideration. And even if you're looking at someone who's single, wouldn't you want to leave a legacy? If you don't have children, what about leaving something to your nieces or nephews? How about leaving a donation to a charitable organization such as your church, such as a community project you would like to help fund financially? There are many options that you have available to you. And you don't have to not have insurance just because you don't have children. You can do more with money than without money. And in this case, as a single person, you can leave money to alleviate problems that would be left behind and leave a legacy. What about a single parent? A single parent would want to leave behind money for that child to be taken care of, as well as college education or lump sum money that they can start their business so they can begin their life when they're turned 18, 19 to 20 on top of things and not behind things. They'll be financially prepared to deal with life. So let's talk about building a safety net. Evaluate how much coverage you actually need. I'll say this. Why don't you take 10 times your financial income, your annual income, to make sure that nothing is left behind? And let's not forget about living benefits, policies that could help during illness or disability. In a previous episode, we talked about how one woman had a huge accident. It was massive, and she was fortunate to live through it. However, she couldn't work for that year, but she had the foresight years previously to buy disability policy. And that disability policy made sure that she had enough money to take care of her while she was recuperating. In fact, she said she had more money using those disability policy because she had more than one and she made more money during that year than she would have had she worked. The bottom line is the family didn't lack. Food was able to be purchased. She was able to pay all her bills until she was able to get back to work. That is one of the things that insurance can do for you. Because let's be honest, we don't know when tragedy is going to strike. We don't know when a situation is going to arise. The thing is, don't wait for a tragedy to strike and then decide I need insurance. Please don't wait for the diagnosis to come from a doctor to then call me and ask me for insurance. Don't wait for your family member to be going into hospice and asking me to see if I can get the insurance company to change their mind and make an exception, because those things just don't happen. Insurance is highly regulated, and the answer to all of that is going to always be no. So let's briefly talk about cash value policies that can have long-term savings tools. If you have an emergency, a one-time emergency, say you need a new heating unit, you need a new roof, and you need to borrow against your policy, your cash value. You've had your policy for a while and you don't want to take out of a loan or deplete your savings. That is one of the things that you can use your cash value for. So a policy should turn into stability. It'll help you have stability, and you won't have a financial disaster. One policy, that's all it takes to turn financial ruin into financial resilience. It's not about fear. It's about love. It's about protection. It's about financial responsibility. And I always tell people, insurance is an act of love, because you love your family members so much, you don't want to see them in financial ruin. Now, I've talked to people who also say, well, I'm not here, so it don't matter. That's not love. That's not love for your family. So let's change that mindset, and so that the next generation winds up financially better than the previous family. We need to change that mindset that I'm not here, so it's okay. It doesn't matter. Well, it does matter. Why not the next generation be financially better than the previous? Why does every generation have to start over with zero? No, why not? Let's start off with, here's money for for your down payment on your home. Here's money so that you don't have to buy a car right away. Here's money so that you can start your business. So that every generation winds up better off than the previous generation. Remember, it's just an act of love. We've shown through all the episodes shared knowledge on all things insurance. If you haven't taken the time to get your insurance plan in place and would like to get a plan in place, or even if you want your plan to be reviewed by insurance experts, send me an email at khowardinsgroup@gmail.com if you're in the Pennsylvania or Delaware areas. Thank you for tuning into the show today. Please tune in every Wednesday at 7 p.m. We'll continue our discussion on insurance and money issues. I have examples and tips to share. This is Karla signing out. Until next week.